a lot's been written around the ability of Saudi Arabia, in particular Russia, to weather low oil prices, but clearly things are starting to get a little bit out of hand now. The level of demand destruction due to the COVID-19 pandemic has been more than anyone probably could have imagined back in February and March. We've seen a 5 to 10 million barrels a day year-on-year reduction in March, and we're expecting at least 15 million barrel a day reduction in April. Some people now saying that's going to be 30 million barrels a day potentially. So, these guys could weather low prices, but $20 Brent, that's obviously too low, and that's probably getting these guys back to the table. We saw the tweets from the White House around a potential 10 to 15 million barrel a day cut. That obviously sent prices up to $35 a barrel on Friday, but now we're seeing that meeting, as you mentioned, delayed from today probably to Thursday on the 9th of this week. That has already had an impact on the market. We've already seen Brent drop from 35 down to 33 right now, and expect that downward trend to continue over the course of the day.
Sure, Tom. We know that Trump says he's not currently planning to hit the two countries with tariffs, but we know this is a president that's really unpredictable. What are the chances of that happening?
Well, look, we're hoping that it's not. But when you think about these cuts, 10 to 15 million barrels a day, obviously that's a positive news flow item. But there's a lot of concerns around 10 million barrel cut and just the logistics of it. So Russia has come out saying that they're amenable to cuts, but they're only potentially willing to go to 1 million barrels a day. That's 10%. That's a lot less than the 18% of their previous commitment. It means that Saudi Arabia is going to have to shoulder a far larger burden this time round. So it looks like we are going to need some US cooperation or some level of involvement from the US. We were hoping, well, I suppose a lot of the US producers were going with the carrot approach. They were wanting to try to regulate supply from US shale production. I think that's what many people were looking for right now. But that is extremely difficult. It's such a fragmented industry out there. You've got so many producers with different production levels, different hedging positions, different debt covenants. So trying to get an equitable position where they can all cut, that's going to be very, very difficult. But we have seen the stick come out with potential tariffs, but obviously that seems counterintuitive right now.
Yes, Tom, I mean, it didn't seem as though President Trump emerged from that meeting with energy leaders on Friday saying, okay, we're willing to get on board and take part in this agreement. Instead, it's almost as if he wants to scare Russia and Saudi into action by threatening these tariffs. Will it work, given the prices that they're facing now?
Yeah, well, again, this discord in OPEC Plus seems to be worse than ever now. So, we're hearing that one of the main reasons why we're seeing this delay is because there is still this blame game going on between Russia and Saudi Arabia as to who is ultimately accountable for prices dropping to where they are. So, to ensure productive talks, that's why we've seen the delay. Now, I think there's still general sense that we are going to see a cut of some sort. I think really we're going to have to see that right now when we look at those demand destruction numbers. It's just I guess what everyone's going to be looking for is the role of the US in this, and then potentially a new OPEC plus.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.